The California Real Estate Salesperson Exam. 107 practice questions with answers and explanations focused on financing and valuation, the highest weight subject, plus California state law under the DRE. After each question, pause and pick your answer before the reveal. Let's begin. Question 1. A promissory note in a real estate loan transaction primarily serves as A. The security instrument that pledges the property as collateral. B. The borrower's personal promise to repay and the evidence of the debt. C. The lender's guarantee to the secondary market. D. The document that transfers legal title to the trustee.
The answer is B. The borrower's personal promise to repay and the evidence of the debt. The promissory note is the borrower's personal promise to repay and is the evidence of the debt itself. The mortgage or deed of trust is the separate security instrument that pledges the property as collateral.
Question 2. Hypothecation, as used in real estate finance, means A. Transferring possession of the property to the lender. B. Releasing a lien once the debt is paid in full. C. Pledging property as security for a debt while retaining possession. D. Selling the loan on the secondary market.
The answer is C. Pledging property as security for a debt while retaining possession. Hypothecation is pledging property as security for a debt while the borrower keeps possession and use of the property, which is exactly how a mortgaged home works.
Question 3. In a deed of trust, who holds the bare-naked legal title to the property? A. The trustor borrower. B. The beneficiary lender. C. The mortgagee. D. The trustee-neutral third party.
The answer is D. The trustee-neutral third party. A deed of trust has three parties. The trustee, a neutral third party, holds bare legal title until the debt is repaid, which permits non-judicial power of sale foreclosure.
Question 4. The three parties to a deed of trust are the trustor, the trustee, and the A. Beneficiary, B. Vendee, C. Mortgager, D. Grantor.
The answer is A. Beneficiary. In a deed of trust, the borrower is the trustor, the neutral third party is the trustee, and the lender is the beneficiary who benefits from the security.
Question 5. In a mortgage as opposed to a deed of trust, the borrower is called the A. Mortgager, B. Trustee, C. Beneficiary, D. Mortgagee.
The answer is A. Mortgager. A mortgage has two parties. The mortgager is the borrower who gives the mortgage, and the mortgagee is the lender who receives it.
Question 6. In a lien-theory state, when a borrower mortgages real property, the lender holds A. Legal title to the property until the loan is paid. B. Equitable title transferred by the trustee. C. Possession of the property during the loan term. D. A lien against the property while the borrower retains title.
The answer is D. A lien against the property while the borrower retains title. In lien theory states the borrower retains legal title, and the lender merely holds a lien as security. In title theory states the lender holds title until the debt is paid.
Question 7. Which document actually creates the lien that pledges real property as collateral for a loan? A. The promissory note. B. The closing disclosure. C. The mortgage or deed of trust. D. The estoppel certificate.
The answer is C. The mortgage or deed of trust. The mortgage or deed of trust is the security instrument that creates the lien on the real property. The note only evidences the debt and the borrower's promise to pay.
Question 8. An acceleration clause in a mortgage or note allows the lender to A. Demand the entire remaining balance at once upon default. B. Charge a fee when the loan is paid off early. C. Call the loan due when the property is sold or transferred. D. Release part of the collateral from the lien.
The answer is A. Demand the entire remaining balance at once upon default. An acceleration clause lets the lender demand the entire unpaid balance immediately upon default. It is a prerequisite to foreclosure.
Question 9. A due-on-sale alienation clause is triggered by A. The borrower missing a monthly payment. B. The property being reassessed for taxes. C. The lender selling the loan on the secondary market. D. The transfer or sale of the property to a new owner.
The answer is D. The transfer or sale of the property to a new owner. A due-on-sale/alienation clause lets the lender call the entire balance due when the property is transferred, effectively blocking loan assumption.
Question 10. A subordination clause in a loan document provides that A. The lien will voluntarily take a lower priority position to another lien. B. The borrower may pay off the loan early without penalty. C. Individual parcels may be released from a blanket loan. D. The lien is released when the debt is fully paid.
The answer is A. The lien will voluntarily take a lower priority position to another lien. A subordination clause is an agreement by which a lien voluntarily takes a lower priority than a lien that would otherwise be junior to it, changing the normal order of priority.
Question 11. A defeasance clause requires the lender to A. Accelerate the debt upon default. B. Approve any assumption of the loan. C. Reduce the interest rate as equity grows. D. Release the lien and return title once the debt is fully paid.
The answer is D. Release the lien and return title once the debt is fully paid. A defeasance clause requires the lender to release the lien and, in title theory states, return legal title to the borrower once the debt is fully satisfied.
Question 12. A partial release clause is most commonly associated with which type of loan? A. An FHA-insured loan. B. A blanket loan covering multiple parcels. C. A purchase money mortgage. D. A home equity line of credit.
The answer is B. A blanket loan covering multiple parcels. A blanket loan covers multiple parcels and contains a partial release clause, so the developer can release free from the lien individual lots as they are sold.
Question 13. In an adjustable rate mortgage ARM, the margin is A. The lender's constant markup added to the index. B. The moving economic indicator to which the rate is tied. C. The fee paid to buy down the starting rate. D. The maximum the rate can rise in one adjustment period.
The answer is A. The lender's constant markup added to the index. In an ARM, the interest rate equals the index plus the margin. The index moves with the market, but the margin is the lender's constant markup that stays the same for the life of the loan.
Question 14. A fully amortized loan is characterized by A. Payments that never fully retire the debt. B. A small balloon payment at the end of the term. C. Interest-only payments with the full principal due as a balloon. D. Equal principal and interest payments that reduce the balance to zero at maturity.
The answer is D. Equal principal and interest payments that reduce the balance to zero at maturity. A fully amortized loan uses level principal and interest payments that pay off the entire balance by maturity, leaving a zero balance with no balloon payment.
Question 15. Which loan structure ends with a balloon payment of the full principal at maturity? A. A fully amortized loan. B. A biweekly amortizing loan. C. A conventional 30-year loan. D. A straight-term interest-only loan.
The answer is D. A straight-term interest-only loan. A straight-term loan is interest-only during the term, so the entire principal remains and comes due as a balloon at maturity.
Question 16. With respect to a conventional loan, private mortgage insurance PMI is A. Required when the loan-to-value is high, but cancelable as equity builds. B. The same thing as an FHA-MIP. C. Required for the entire life of the loan and never cancelable. D. Paid by the lender to protect the borrower.
The answer is A. Required when the loan-to-value is high but cancelable as equity builds. On conventional loans, PMI is required when the loan-to-value ratio is high small down payment and protects the lender, but it is cancelable once the borrower builds sufficient equity.
Question 17. Under an FHA-insured loan, the FHA A. Insures the lender against loss if the borrower defaults. B. Makes the loan directly to the borrower. C. Guarantees the top portion of the loan for veterans. D. Buys the loan on the secondary market.
The answer is A. Insures the lender against loss if the borrower defaults. The FHA insures the lender against loss. It does not make or guarantee the loan.
Question 18. Under a VA-guaranteed loan, the Department of Veterans Affairs A. Guarantees a portion of the loan for eligible veterans. B. Insures the borrower's monthly payments. C. Originates the loan directly to the veteran. D. Sets the interest rate charged by the lender.
The answer is A. Guarantees a portion of the loan for eligible veterans. The VA guarantees part of the loan for eligible veterans, which reduces the lender's risk and allows low or no down payment. The VA neither makes nor insures the loan.
Question 19. A purchase money mortgage most commonly refers to A. Seller financing, where the seller carries back a note from the buyer. B. A loan that covers several parcels of land. C. A loan insured by the FHA. D. A loan that includes personal property with the real estate.
The answer is A. Seller financing, where the seller carries back a note from the buyer. A purchase money mortgage is seller financing a carryback in which the seller extends credit to the buyer and takes back a note and mortgage as part of the purchase price.
Question 20. A wraparound all-inclusive mortgage is one in which A. A new, larger loan wraps around and includes the existing loan. B. Personal property is pledged along with the real estate. C. Several parcels are covered by one lien. D. The loan releases individual lots as they are sold.
The answer is A. A new, larger loan wraps around and includes the existing loan. A wraparound or all-inclusive trust deed 8 is a new, larger junior loan that wraps around the existing loan, which stays in place. The wrap lender makes payments on the underlying loan.
Question 21. A package mortgage is distinguished by the fact that it A. Wraps around an existing underlying loan. B. Is financed directly by the seller. C. Covers several separate parcels of real estate. D. Includes personal property or fixtures along with the real property.
The answer is D. Includes personal property or fixtures along with the real property. A package mortgage finances real property together with personal property or fixtures, such as appliances or furnishings under a single loan, common in some condominium sales.
Question 22. Under a land contract for deed, during the contract term the seller A. Retains legal title until the buyer completes the payments. B. Conveys legal title to the buyer immediately at signing. C. Must record a deed of trust in the buyer's name. D. Has no interest in the property once payments begin.
The answer is A. Retains legal title until the buyer completes the payments. In a land contract, the seller retains legal title while the buyer takes possession and makes installment payments. Title passes only when the buyer has paid as agreed.
Question 23. Judicial foreclosure differs from non-judicial power of sale foreclosure, primarily in that judicial foreclosure A. Is faster and rarely permits a deficiency judgment. B. Never requires the property to be sold. C. Is court-supervised and may permit a deficiency judgment. D. Is used only with FHA loans.
The answer is C. Is court-supervised and may permit a deficiency judgment. Judicial foreclosure is a court-ordered and court-supervised sale that may allow the lender to obtain a deficiency judgment for the shortfall. Non-judicial power of sale is faster and often bars a deficiency.
Question 24. A deficiency judgment allows a lender to A. Reclaim the property after a deed in lieu. B. Force the borrower to reinstate the loan before sale. C. Waive the borrower's right of redemption. D. Recover the shortfall from the borrower when the sale doesn't cover the debt.
The answer is D. Recover the shortfall from the borrower when the sale doesn't cover the debt. A deficiency judgment is a personal judgment against the borrower for the difference when the foreclosure sale proceeds are less than the debt owed. It is more available in judicial foreclosures.
Question 25. The equity of redemption gives a defaulting borrower the right to A. Force the lender to accept a deed in lieu. B. Obtain a deficiency judgment against the lender. C. Redeem the property for a period after the foreclosure sale. D. Redeem the property by paying the debt before the foreclosure sale.
The answer is D. Redeem the property by paying the debt before the foreclosure sale. The equity of redemption lets the borrower cure the default and redeem the property by paying the full debt before the foreclosure sale. Statutory redemption, where it exists, applies after the sale.
Question 26. Statutory redemption, where it exists, allows the borrower to A. Redeem the property only before the sale. B. Avoid any deficiency judgment automatically. C. Transfer the loan to a new borrower. D. Redeem the property for a set period after the foreclosure sale.
The answer is D. Redeem the property for a set period after the foreclosure sale. Statutory redemption, available only in some states, gives the borrower a defined period after the foreclosure sale to redeem the property by paying the required amount.
Question 27. A deed in lieu of foreclosure is best described as A. A period to cure the default before sale. B. A voluntary conveyance of the property to the lender to avoid foreclosure. C. A clause that makes the entire balance due on default. D. A court order transferring the property to the highest bidder.
The answer is B. A voluntary conveyance of the property to the lender to avoid foreclosure. A deed in lieu of foreclosure is a voluntary conveyance in which the borrower gives the property directly to the lender to satisfy the debt and avoid the foreclosure process.
Question 28. Reinstatement of a defaulted loan means the borrower A. Cures the default by bringing the loan current before the sale. B. Redeems the property after the foreclosure sale. C. Voluntarily deeds the property to the lender. D. Pays the full accelerated balance after the sale.
The answer is A. Cures the default by bringing the loan current before the sale. Reinstatement lets the borrower cure the default by paying the missed payments plus costs to bring the loan current before the foreclosure sale, without paying off the entire balance.
Question 29. RESPA, the Real Estate Settlement Procedures Act, primarily applies to A. Commercial loans over $1 million. B. All cash residential purchases. C. Farm and ranch land only. D. Federally related mortgage loans on 1-4-unit residential property.
The answer is D. Federally related mortgage loans on 1-4-unit residential property. RESPA applies to federally related mortgage loans secured by 1-4-unit residential property. It requires settlement cost disclosures and prohibits kickbacks and referral fees among settlement service providers.
Question 30. A core prohibition of RESPA is against A. Charging any origination fee. B. Making adjustable rate loans. C. Kickbacks, referral fees, and unearned fees among settlement service providers. D. Disclosing the APRA to the borrower.
The answer is C. Kickbacks, referral fees, and unearned fees among settlement service providers. RESPA Section 8 prohibits giving or accepting kickbacks, referral fees, or unearned fees for the referral of settlement service business, protecting consumers from inflated costs.
Question 31. The Truth in Lending Act Regulation Z requires lenders to disclose the cost of credit primarily as the A. Annual percentage rate APRA and finance charge. B. Gross rent multiplier. C. Note nominal interest rate only. D. Loan-to-value ratio.
The answer is A. Annual percentage rate APRA and finance charge. TILA/Reg Z requires disclosure of the total cost of credit as the annual percentage rate APRA and the finance charge, so borrowers can compare loans on a uniform basis.
Question 32. Under TILA right of rescission, a borrower may cancel the transaction within 3 business days on A. Purchase money loan on a new home. B. A loan to buy an investment fourplex. C. A refinance or home equity loan on a primary residence. D. A commercial construction loan.
The answer is C. A refinance or home equity loan on a primary residence. The TILA 3 business day right of rescission applies to refinances and home equity loans on a borrower's primary residence. It does not apply to a purchase money loan to buy a home.
Question 33. In advertising loan terms, which of the following may be stated alone without triggering full disclosure of all credit terms? A. The monthly payment amount. B. The amount of the down payment. C. The annual percentage rate APRA. D. The number of payments.
The answer is C. The annual percentage rate APRA. Under Reg Z, the APRA is not a trigger term and may be advertised alone.
Question 34. The Equal Credit Opportunity Act, ECOA prohibits A. Advertising a specific interest rate. B. Discrimination in lending based on protected classes. C. Selling loans on the secondary market. D. Charging discount points on a loan.
The answer is B. Discrimination in lending based on protected classes. ECOA prohibits discrimination in any aspect of a credit transaction based on protected classes such as race, color, religion, national origin, sex, marital status, age, or receipt of public assistance.
Question 35. TRID integrates the disclosures of TILA and RESPA into which 2 forms? A. The note and the deed of trust. B. The loan estimate and the closing disclosure. C. The Uniform Residential Appraisal Report and the CMA. D. The HUD1 and the Good Faith Estimate.
The answer is B. The loan estimate and the closing disclosure. The TILA-RESPA Integrated Disclosure TRID rule combined the older disclosures into the loan estimate given early and the closing disclosure given before closing, enforced by the CFPB.
Question 36. A licensee refers every buyer to one title company and receives a cash payment for each referral. This most likely violates A. The Statute of Frauds. B. TILA/Regulation Z. C. ECOA. D. RESPA.
The answer is D. RESPA. Paying or receiving a fee simply for referring settlement service business, like title insurance, is a prohibited kickback under RESPA Section 8, which bars unearned referral fees.
Question 37. The primary mortgage market is where? A. Ginnie Mae guarantees mortgage-backed securities. B. The Federal Reserve sets the discount rate. C. Lenders originate loans directly to borrowers. D. Existing loans are bought and sold among investors.
The answer is C. Lenders originate loans directly to borrowers. In the primary market, lenders originate loans directly to borrowers. The secondary market is where those existing loans are bought and sold to provide liquidity.
Question 38. Fannie Mae FNMA and Freddie Mac FHLMC function in the mortgage market primarily by A. Buying existing loans on the secondary market. B. Originating loans directly to homebuyers. C. Setting the federal funds rate. D. Insuring lenders against borrower default.
The answer is A. Buying existing loans on the secondary market. Fannie Mae and Freddie Mac buy existing loans from lenders on the secondary market, which replenishes lender funds and provides liquidity so more loans can be originated.
Question 39. Ginnie Mae GNMA differs from Fannie Mae and Freddie Mac in that Ginnie Mae A. Buys conventional loans on the secondary market. B. Guarantees securities backed by government FHA/VA loans. C. Originates loans directly to veterans. D. Sets reserve requirements for banks.
The answer is B. Guarantees securities backed by government FHA/VA loans. Ginnie Mae, a government corporation, guarantees mortgage-backed securities backed by government-insured or guaranteed FHA and VA loans. It does not buy loans the way Fannie and Freddie do.
Question 40. When the Federal Reserve tightens monetary policy by selling government securities and raising reserve requirements, the general effect is A. Less money in circulation and higher interest rates. B. No change in the money supply. C. Automatic cancellation of PMI. D. More money in circulation and lower interest rates.
The answer is A. Less money in circulation and higher interest rates. Tightening selling securities on the open market and raising reserve requirements pulls money out of circulation, reducing the money supply and pushing interest rates higher.
Question 41. One discount point paid on a mortgage loan equals A. 1% of the loan amount. B. 1% of the sale price of the property. C. 1% of the appraised value. D. 1% of the borrower's down payment.
The answer is A. 1% of the loan amount. A discount point is 1% of the loan amount, not the sale price, paid to the lender to buy down the interest rate.
Question 42. When calculating loan-to-value LTV, the value used in the denominator is A. The lower of the sale price or appraised value. B. The higher of the sale price or appraised value. C. Always the sale price. D. Always the appraised value.
The answer is A. The lower of the sale price or appraised value. Lenders base LTV on the lower of the sale price or the appraised value to limit their risk, so the loan amount is divided by whichever figure is smaller.
Question 43. In real estate investment, leverage refers to A. Using borrowed funds to increase the potential return on invested equity. B. Insuring the loan against default. C. Paying all cash to avoid interest costs. D. Combining adjacent parcels to raise value.
The answer is A. Using borrowed funds to increase the potential return on invested equity. Leverage is the use of borrowed money, other people's money, to control an asset and increase the potential return on the investor's own equity invested.
Question 44. The four characteristics that an item must have to possess value dust are demand, utility, scarcity, and A. Transferability. B. Timeliness. C. Tangibility. D. Taxability.
The answer is A. Transferability. Value requires dust, demand, utility, scarcity, and transferability.
Question 45. Market value is best defined as A. The cost to construct the improvements today. B. The assessed value used for property taxes. C. The most probable price a willing, informed buyer and seller would agree upon without undue pressure. D. The dollar amount actually paid for a property.
The answer is C. The most probable price a willing, informed buyer and seller would agree upon without undue pressure. Market value is the most probable price a willing, informed buyer and seller would agree upon in an arm's-length transaction with no undue pressure. It differs from price what was paid and cost to create.
Question 46. A buyer pays $500,000 for a home that would cost $560,000 to rebuild new today and recently appraised at $505,000. The $500,000 figure represents the A. Cost, B. Assessed value, C. Price, D. Market value.
The answer is C. Price. Price is the amount actually paid in a specific transaction, $500,000.
Question 47. Which of the following is one of the four broad forces that influence real property value? A. The buyer's credit score. B. Governmental, political, and legal factors. C. The listing broker's commission rate. D. The seller's original purchase price.
The answer is B. Governmental, political, and legal factors. The four forces influencing value are social, economic, governmental, political/legal, including zoning and taxes, and physical/environmental factors.
Question 48. In the sales comparison approach, adjustments are made to A. The comparable properties, B. The subject property, C. The land value only, D. Both the subject and the comparables equally.
The answer is A. The comparable properties. In the sales comparison approach, the appraiser adjusts the comparable sales toward the subject, never the subject itself. Subtract from a superior comp and add to an inferior comp.
Question 49. A comparable sale is superior to the subject property because it has an extra garage. To adjust, the appraiser should A. Add value to the subject, B. Subtract value from the subject, C. Add value to the comparable, D. Subtract value from the comparable.
The answer is D. Subtract value from the comparable. You always adjust the comparable, never the subject.
Question 50. The principle of substitution, which underlies the sales comparison approach, holds that A. A buyer will pay no more than the cost of an equally desirable substitute. B. Combining parcels always increases value. C. The most expensive comparable sets the value. D. Value always increases over time.
The answer is A. A buyer will pay no more than the cost of an equally desirable substitute. The principle of substitution says a prudent buyer will pay no more for a property than the cost of acquiring an equally desirable substitute. It is the foundation of the sales comparison approach.
Question 51. The cost approach to value is generally most appropriate for A. Large apartment complexes bought for income, B. New or special purpose properties such as schools and churches, C. Vacant residential land, D. Older single-family tract homes.
The answer is B. New or special purpose properties such as schools and churches. The cost approach is best for new or special purpose properties, schools, churches, libraries that rarely sell and produce no income, because comparable sales and income data are scarce.
Question 52. The difference between replacement cost and reproduction cost is that replacement cost is the cost to build A. An exact replica using the same materials and design, B. A structure of equivalent utility using current materials and methods, C. The improvements at their original historical price, D. Only the land beneath the improvements.
The answer is B. A structure of equivalent utility using current materials and methods. Replacement cost is the cost to build a structure of equivalent utility using current materials and methods. Reproduction cost is the cost to build an exact replica of the original.
Question 53. In the cost approach, value is estimated as A. Sale price divided by monthly rent. B. Net operating income divided by capitalization rate. C. Comparable sales adjusted to the subject. D. Land value plus reproduction or replacement cost of improvements minus accrued depreciation.
The answer is D. Land value plus reproduction or replacement cost of improvements minus accrued depreciation. The cost approach formula is land value plus the reproduction or replacement cost of the improvements minus accrued depreciation.
Question 54. In the income capitalization approach, the formula for value is A. Net operating income times capitalization rate. B. Net operating income divided by capitalization rate. C. Capitalization rate divided by net operating income. D. Gross income times the GRM.
The answer is B. Net operating income divided by capitalization rate. Value equals net operating income divided by the capitalization rate V equals NOI divided by R.
Question 55. A property produces $60,000 in net operating income and the market cap rate is 8%. Its indicated value is A. $600,000, B. $750,000, C. $4,800,000, D. $480,000.
The answer is B. $750,000. Value equals NOI divided by cap rate equals $60,000 divided by 0.08 equals $750,000.
Question 56. If two properties have identical net operating income, the one valued using a higher capitalization rate will have A. Higher value. B. Identical value. C. Lower value. D. Undeterminable value.
The answer is C. Lower value. Because value equals income divided by the cap rate. A higher cap rate which signals higher risk produces a lower value for the same income. Rate and value move inversely.
Question 57. When computing net operating income NOI for the income approach, which expense is not deducted? A. Insurance premiums. B. Property taxes. C. Debt service mortgage principal and interest. D. Property management fees.
The answer is C. Debt service mortgage principal and interest. NOI is effective gross income minus operating expenses. Debt service mortgage payments is a financing cost, not an operating expense, and is never deducted when calculating NOI.
Question 58. The gross rent multiplier GRM for small residential rental property is calculated as A. Monthly rent divided by sale price. B. Net operating income divided by cap rate. C. Sale price divided by monthly rent. D. Sale price times the cap rate.
The answer is C. Sale price divided by monthly rent. The GRM equals sale price divided by monthly rent.
Question 59. Reconciliation in the appraisal process is best described as A. Averaging the values from the three approaches. B. Adjusting the comparables to the subject. C. Weighing the approaches to arrive at a final opinion of value. D. Selecting only the highest of the three approaches.
The answer is C. Weighing the approaches to arrive at a final opinion of value. Reconciliation is the appraiser's analysis of weighing the three approaches, giving most weight to the most reliable for the property type, to reach a final opinion of value. It is not a simple average.
Question 60. Physical deterioration, as a form of depreciation, refers to A. A nearby nuisance lowering value. B. An outdated floor plan or obsolete design. C. A decline in the surrounding neighborhood. D. Wear and tear on the property from use and age.
The answer is D. Wear and tear on the property from use and age. Physical deterioration is loss in value from ordinary wear and tear, use, and the action of the elements. It is often curable through repair or maintenance.
Question 61. A home with only one bathroom and a poor, outdated floor plan suffers from A. External obsolescence. B. Functional obsolescence. C. Economic appreciation. D. Physical deterioration.
The answer is B. Functional obsolescence. Functional obsolescence is a loss in value caused by outdated design, features, or a poor floor plan within the property itself. It may be curable or incurable.
Question 62. External economic obsolescence is distinguished by the fact that it A. Arises from causes outside the property and is incurable by the owner. B. Is always inexpensive to cure. C. Can be fixed by remodeling the interior. D. Results from wear and tear inside the structure.
The answer is A. Arises from causes outside the property and is incurable by the owner. External economic obsolescence is caused by factors outside the property boundaries, such as a nearby nuisance or a declining neighborhood, and is generally incurable because the owner cannot control off-site conditions.
Question 63. Under the principle of progression, a modest home located among larger, more expensive homes will tend to A. Gain value from its higher value neighbors. B. Have its value averaged with the neighbors. C. Be unaffected by neighboring values. D. Lose value because of its higher value neighbors.
The answer is A. Gain value from its higher value neighbors. Progression holds that the value of a modest property is enhanced gains value by its proximity to higher value properties. Regression is the opposite, where a superior home loses value among lesser ones.
Question 64. Highest and best use of a parcel must be legally permissible, physically possible, financially feasible, and A. Maximally productive. B. The least expensive to build. C. The current use of the land. D. Approved by the listing broker.
The answer is A. Maximally productive. Highest and best use is the use that is legally permissible, physically possible, financially feasible, and maximally most productive, yielding the greatest net return to the land.
Question 65. The principle of contribution states that an improvement adds A. Exactly what it costs to install. B. Value only if it is the newest feature. C. Only the value it contributes to the whole, which may differ from its cost. D. Always more value than its cost.
The answer is C. Only the value it contributes to the whole, which may differ from its cost. Contribution holds that an improvement is worth only the value it adds to the whole property, which may be more or less than its cost. A $30, 000 pool might add only $10, 000 of value.
Question 66. Combining two or more adjacent parcels under one ownership to create greater total value is known as A. Reconciliation. B. Subordination. C. Assemblage, and the added value is called plottage. D. Accretion.
The answer is C. Assemblage, and the added value is called plottage. Assemblage is the act of combining adjacent parcels into one larger tract. The increase in value resulting from that combination is called plottage value.
Question 67. An appraiser's fee for a residential appraisal assignment should be based on A. The commission earned on the sale. B. A flat fee for the assignment, regardless of the value concluded. C. A percentage of the value concluded. D. The loan amount requested by the borrower.
The answer is B. A flat fee for the assignment, regardless of the value concluded. To keep appraisals independent, an appraiser is paid a flat fee for the assignment and never a percentage of the value concluded, which would create a conflict of interest.
Question 68. A comparative market analysis, CMA, prepared by a real estate licensee is A. A pricing tool to help set a listing or offer price, not a formal appraisal. B. A formal appraisal that meets USPAP standards. C. A guarantee of the property's market value. D. A required federal disclosure at closing.
The answer is A. A pricing tool to help set a listing or offer price, not a formal appraisal. A CMA, like a broker price opinion, is a licensee's estimate used to help price a property for listing or offer. It is not a formal appraisal and does not meet appraisal USPAP standards.
Question 69. A licensed salesperson closes a deal and the grateful seller wants to hand the salesperson a cash bonus directly. Under California real estate law, how may the salesperson lawfully be paid? A. From the escrow company as an independent contractor. B. Only through the employing broker under their written agreement. C. Directly from the buyer's lender at closing. D. Directly from the seller since the seller chose to pay.
The answer is B. Only through the employing broker under their written agreement. A salesperson may only accept compensation from their employing broker, never directly from a principal or third party, because a salesperson acts solely under the broker's supervision pursuant to a written employment agreement and cannot operate independently.
Question 70. A buyer hands a salesperson a $10,000 good faith deposit check on a Monday. The broker's policy is to place such funds into a neutral escrow depository. Absent contrary written instructions, by when must the funds be deposited? A. Within 5 business days. B. No later than 3 business days after receipt. C. Within 24 hours. D. By the end of the calendar month.
The answer is B. No later than 3 business days after receipt. Trust funds received on behalf of others must be placed into a neutral escrow depository, into the hands of the principal, or into a trust account no later than 3 business days after receipt, ensuring client money is not held improperly.
Question 71. A broker uses $2,000 from the trust account to cover the office rent, intending to replace it after the next commission arrives. How is this act best characterized? A. Reconciliation of the trust account. B. Commingling only, which is permitted short-term. C. A permissible advance against future commissions. D. Conversion, an unlawful use of clients' funds.
The answer is D. Conversion, an unlawful use of clients' funds. Actually spending clients' trust funds for the broker's own purposes is conversion, which is more serious than commingling, merely mixing funds. Both are prohibited, but conversion involves using the money and can lead to license revocation.
Question 72. A DRE audit reviews a broker's trust account handling. Which pair of requirements is correct? A. Reconcile the trust account at least monthly. Retain records for 3 years. B. Reconcile only at year-end. Retain records permanently. C. Reconcile annually. Retain records for 7 years. D. Reconcile weekly. Retain records for 1 year.
The answer is A. Reconcile the trust account at least monthly. Retain records for 3 years. A broker must reconcile the trust account with the separate record of each beneficiary at least once a month, and must retain trust fund records for 3 years, so the DRE can verify no client funds were mishandled.
Question 73. A California homeowner alleges a lender refused a mortgage based on the racial makeup of the neighborhood. Which California statute most directly addresses discrimination in lending? A. The Elquis-Priolo Act. B. The Unruh Civil Rights Act. C. The Holden Act Housing Financial Discrimination Act. D. The Subdivided Lands Act.
The answer is C. The Holden Act Housing Financial Discrimination Act. The Holden Act specifically prohibits discrimination in real estate lending, including redlining based on neighborhood characteristics, while UNRUH covers business establishments and Elquis-Priolo concerns earthquake fault zones.
Question 74. A restaurant owner refuses service to a customer because of the customer's religion. Which California law is designed to prohibit this discrimination by a business establishment? A. The Easton Disclosure Rule. B. The Unruh Civil Rights Act. C. The Holden Act. D. The Rumford Fair Housing Act FHA.
The answer is B. The Unruh Civil Rights Act. The Unruh Civil Rights Act bars discrimination by all business establishments in California, whereas the Rumford Act/FHA targets housing specifically, and the Holden Act targets lending.
Question 75. A 3-unit residential property is being sold at a trustee's sale following foreclosure. Is a transfer disclosure statement, TDS, required? A. Yes. All residential transfers require a TDS with no exceptions. B. No transfers by a trustee's/foreclosure sale are exempt from the TDS. C. No, because the property has more than 2 units. D. Yes, but only if the buyer requests it in writing.
The answer is B. No transfers by a trustee's/foreclosure sale are exempt from the TDS. The TDS is required on sales of 1 to 4 residential units, but transfers by a trustee/foreclosure sale and by probate, court order, etc., are specifically exempt because the seller lacks personal knowledge of the property's condition.
Question 76. Under the doctrine established by Easton v. Strasburger, what duty does a listing broker owe when selling a 1 to 4 unit residential property? A. To conduct a reasonably competent and diligent visual inspection of accessible areas and disclose findings. B. To hire a licensed engineer to certify the structure. C. To guarantee the property is free of all defects. D. To inspect only if the buyer pays for the inspection.
The answer is A. To conduct a reasonably competent and diligent visual inspection of accessible areas and disclose findings. Easton v.
Question 77. The DRE Commissioner initiates a formal disciplinary proceeding against a currently licensed broker for a violation. What is this document called? A. A notice of default. B. A statement of issues. C. A desist and refrain order. D. An accusation.
The answer is D. An accusation. An accusation is filed against an existing licensee to begin disciplinary action, whereas a statement of issues is used against an applicant for a license. Distinguishing the two is a common exam point.
Question 78. An agent tells homeowners that minority families are moving into the area and that they should sell now before values drop. What prohibited practice is this? A. Blockbusting panic peddling. B. Puffing. C. Redlining. D. Steering.
The answer is A. Blockbusting panic peddling. Blockbusting panic peddling is inducing owners to sell by exploiting fears about the entry of a protected class into the neighborhood. Steering directs buyers toward or away from areas, and redlining is a lending refusal.
Question 79. A listing agent is bound by fiduciary duties to the seller summarized by the acronym ACOLD. Which set correctly lists these duties? A. Accountability, care, obedience, loyalty, disclosure. B. Appraisal, contract, option, loan, deposit. C. Acceptance, consideration, offer, lease, deed. D. Advertising, cost, ownership, location, design.
The answer is A. Accountability, care, obedience, loyalty, disclosure. The fiduciary duties owed to a principal are accountability, care, obedience, loyalty, and disclosure accord, which include not making secret profits and accounting for all funds on demand.
Question 80. An agent lawfully represents both buyer and seller as a disclosed dual agent. The seller privately tells the agent she will accept far less than list price. What may the agent do with that information? A. Tell the buyer, since the agent also represents the buyer. B. Keep it confidential. A dual agent may not disclose either party's bottom line price. C. Use it to negotiate a higher commission. D. Disclose it only if the buyer directly asks.
The answer is B. Keep it confidential. A dual agent may not disclose either party's bottom line price. Even in a lawful disclosed dual agency, the agent may not reveal either party's confidential bottom line price or motivation without permission, because doing so would breach the duty of confidentiality owed to that party.
Question 81. California's statutory agency disclosure requires 3 steps in a specific order. What is the correct sequence? A. Elect, disclose, confirm. B. Disclose, confirm, elect. C. Disclose, elect, confirm. D. Confirm, elect, disclose.
The answer is C. Disclose, elect, confirm. The agent must first disclose the agency relationship options as soon as practicable, then elect the actual relationship, then confirm it in the purchase contract, so all parties understand who represents whom.
Question 82. An owner hires a property manager to handle ongoing leasing, maintenance, and rent collection for an apartment building over several years. What type of agent is the property manager? A. A gratuitous agent. B. A special agent. C. A general agent. D. A dual agent.
The answer is C. A general agent. A property manager is a general agent because they handle ongoing, continuous transactions on the principal's behalf, unlike a listing agent who is a special agent for a single transaction.
Question 83. A person signs a contract on behalf of an owner without prior authority. The owner later learns of it and accepts the benefits of the deal. How was the agency created? A. By necessity. B. By ratification. C. By express written agreement. D. By estoppel.
The answer is B. By ratification. Ratification creates an agency after the fact when a principal accepts or approves an act that was performed without prior authority, effectively adopting the agent's unauthorized conduct.
Question 84. An agent secretly represents both parties in a sale without disclosing the dual relationship. When it is discovered, what is a likely consequence for the agent? A. Automatic conversion to a single agency arrangement. B. Forfeiture of commission plus possible rescission and discipline. C. Nothing, provided the deal closed successfully. D. A reduced commission of half the normal amount.
The answer is B. Forfeiture of commission plus possible rescission and discipline. Undisclosed dual agency is a serious breach of fiduciary duty. The agent can forfeit the entire commission, the injured party may rescind the transaction, and the DRE may impose discipline.
Question 85. A principal, by their words and conduct, leads a third party to reasonably believe a person is their agent, though no formal authority was granted. What kind of authority does the agent have? A. Ostensible apparent authority. B. Actual express authority. C. Universal authority. D. Statutory authority.
The answer is A. Ostensible apparent authority. Ostensible apparent authority arises when a principal's conduct causes a third party to reasonably believe someone is the principal's agent. This can create agency by estoppel, even without express authority.
Question 86. Two unmarried siblings take title as joint tenants. One sibling dies, leaving a will devising her share to a friend. What happens to her interest? A. It passes to the friend named in the will. B. It passes automatically to the surviving joint tenant by right of survivorship, not to the friend. C. It is divided equally between the friend and the surviving sibling. D. It escheats to the state.
The answer is B. It passes automatically to the surviving joint tenant by right of survivorship, not to the friend. Joint tenancy carries the right of survivorship, so a deceased joint tenant's interest passes automatically to the surviving joint tenant and cannot be transferred by will, avoiding probate.
Question 87. A grantor conveys property to A for life, then to B. What future interest does B hold? A. A fee simple defeasible. B. A reversion. C. A reversion to the grantor's heirs. D. A remainder.
The answer is D. A remainder. When a life estate is followed by an interest granted to a named third party B, that interest is a remainder. If the property instead returned to the grantor, it would be a reversion.
Question 88. A person dies owning California real property with no will and no locatable heirs. Under which government power does the property pass to the state? A. Escheat. B. Police power. C. Eminent domain. D. Taxation.
The answer is A. Escheat. Escheat is the government power by which property of a person who dies intestate with no heirs passes to the state. The four government powers are recalled by Pete: police power, eminent domain, taxation, escheat.
Question 89. A court must decide whether a built-in bookshelf is a fixture. Under the Maria test, which single factor is generally given the most weight? A. Agreement between the parties. B. Intention of the party who attached it. C. Adaptability to the property. D. Method of attachment.
The answer is B. Intention of the party who attached it. In the Maria test method, adaptability, relationship, intention, agreement. Intention is generally the most important factor courts consider when deciding whether an item has become a fixture.
Question 90. A developer wants to divide a parcel into 8 lots for sale. Under the Subdivided Lands Act, what must the developer obtain before marketing the lots? A. A homestead declaration. B. A notice of default. C. A public report from the DRE. D. A coastal commission variance.
The answer is C. A public report from the DRE. The Subdivided Lands Act applies to subdivisions of 5 or more parcels and requires the developer to obtain a public report from the DRE preliminary/pink, then final/white before selling, to protect purchasers.
Question 91. An appraiser must value a property that generates rental income. Which approach is most appropriate, and what is the basic relationship? A. Income approach. Value equals NOI divided by capitalization rate. B. Cost approach. Value equals replacement cost minus land. C. GRM approach. Value equals NOI times cap rate. D. Sales comparison. Value equals average of nearby sales.
The answer is A. Income approach. Value equals NOI divided by capitalization rate. The income capitalization approach is best for income-producing property. Value equals net operating income divided by the cap rate.
Question 92. An appraiser is valuing a newly built church with no comparable sales and no rental income. Which valuation approach is most reliable? A. Sales comparison approach. B. Cost replacement approach. C. Income approach. D. Gross rent multiplier.
The answer is B. Cost replacement approach. The cost/replacement approach is most reliable for new, unique, or special-purpose properties such as churches, schools, and government buildings, where comparable sales and income data are lacking.
Question 93. A busy freeway is built adjacent to a residential neighborhood, permanently reducing home values from the constant noise. This loss in value is an example of what type of depreciation? A. Economic external obsolescence, generally incurable. B. Accrued appreciation. C. Physical deterioration, usually curable. D. Functional obsolescence from outdated design.
The answer is A. Economic external obsolescence, generally incurable. Economic external obsolescence is caused by factors outside the property lines, such as a new freeway or neighborhood decline, and is generally incurable because the owner cannot control the external cause.
Question 94. After completing all three approaches to value, an appraiser must arrive at a final value estimate. What does the reconciliation step involve? A. Weighing the approaches based on reliability for this property, not averaging them. B. Averaging the three values arithmetically. C. Selecting the highest of the three values. D. Adding the three values and applying the cap rate.
The answer is A. Weighing the approaches based on reliability for this property, not averaging them. Reconciliation is the appraiser's analysis weighing the relative reliability of each approach for the specific property to reach a final opinion of value. It is never a simple mathematical average.
Question 95. Which of the following is a required element for a valid and enforceable real estate contract? A. A licensed broker as a party. B. Mutual consent through offer and acceptance. C. Recording with the county. D. Notarization of both signatures.
The answer is B. Mutual consent through offer and acceptance. A valid contract requires capable parties, a lawful object, consideration, and mutual consent offer and acceptance/meeting of the minds. Notarization and recording are not required for validity.
Question 96. A 16-year-old signs a contract to purchase a condominium. What is the legal status of this contract? A. Void from the beginning. B. Voidable by the minor. C. Enforceable only against the seller. D. Fully valid and binding.
The answer is A. Void from the beginning. Because a minor lacks contractual capacity, the contract is voidable. The minor may disaffirm it.
Question 97. A seller signs an exclusive right to sell listing. Which requirement is specifically mandated for this type of listing in California? A. It may only be given to a realtor. B. It must be renewed monthly. C. It must contain a definite, specified termination date. D. It must be recorded with the county.
The answer is C. It must contain a definite, specified termination date. An exclusive listing right to sell or agency must contain a definite, specified termination date. A broker who uses an exclusive listing without one is subject to discipline.
Question 98. Under the Statute of Frauds in California, which of these agreements is not required to be in writing to be enforceable? A. An agreement between two brokers to split a commission. B. A lease for a term of 2 years. C. A contract for the sale of real property. D. An agreement authorizing an agent to sell real estate.
The answer is A. An agreement between two brokers to split a commission. The Statute of Frauds requires real property sales, leases of 1 year or longer, and agency agreements to sell real estate to be in writing, but a commission split between two brokers need not be written.
Question 99. In a California deed of trust, which party holds bare-naked legal title as a neutral third party? A. The vendee. B. The trustor. C. The beneficiary. D. The trustee.
The answer is D, the trustee. In a deed of trust, the trustor is the borrower, the beneficiary is the lender, and the trustee is the neutral third party who holds bare legal title with the power of sale until the loan is repaid.
Question 100. A lender completes a non-judicial power of sale foreclosure on a California home. Regarding the borrower's remaining obligations and rights, which statement is correct? A. The borrower has a 1-year redemption right after the sale. B. The lender may pursue a deficiency judgment. C. The borrower keeps possession for 1 year rent-free. D. No deficiency judgment and no right of redemption after the sale.
The answer is D, no deficiency judgment and no right of redemption after the sale. In a non-judicial foreclosure, the lender waives the right to a deficiency judgment, and the borrower has no post-sale redemption right. By contrast, judicial foreclosure allows a deficiency judgment but grants a redemption period.
Question 101. A buyer takes over an existing loan's payments subject to the loan without a novation. Who remains primarily liable to the lender? A. The lender releases all parties. B. The original seller borrower remains primarily liable. C. The trustee becomes liable. D. The buyer becomes solely liable.
The answer is B. The original seller borrower remains primarily liable. When a buyer takes title subject to an existing loan, the original borrower remains primarily liable. In a true assumption, the buyer becomes primarily liable and the seller may be released, which is the key distinction.
Question 102. A grantor signs a deed that conveys whatever interest, if any, the grantor may have in a parcel, with no warranties of title. What type of deed is this? A. A grant deed. B. A trustee's deed. C. A quitclaim deed. D. A warranty deed.
The answer is C, a quitclaim deed. A quitclaim deed conveys only whatever interest the grantor may have, with no warranties, whereas a grant deed carries 2 implied warranties, no prior conveyance, and no undisclosed encumbrances by the grantor.
Question 103. In California's property tax fiscal year, the second installment of property taxes becomes delinquent after which date? A. February 1. B. April 10. C. December 10. D. November 1.
The answer is B, April 10. The first installment is due Nov 1 and delinquent after Dec 10. The second installment is due Feb 1 and delinquent after April 10, mnemonic no darn fooling around.
Question 104. A person openly occupies a neighbor's vacant lot, using it continuously and notoriously, and pays the property taxes for the statutory period. What is the minimum time required to claim title by adverse possession in California? A. 10 years of occupancy only. B. 5 years, including payment of property taxes for 5 years. C. 3 years with no tax payment required. D. 7 years with a recorded claim.
The answer is B, 5 years, including payment of property taxes for 5 years. In California, adverse possession requires open, notorious, hostile, and continuous possession for 5 years and payment of the property taxes for those 5 years. Without the tax payment, the claim fails.
Question 105. 1 acre contains how many square feet? A. 280 square feet. B. 640 square feet. C. 560 square feet. D. 10,000 square feet.
The answer is C, 560 square feet. 1 acre equals exactly 560 square feet. A fixed land measurement constant, the California exam, expects you to have memorized a recall fact, not a calculation.
Question 106. How many linear feet are in 1 mile? A. 1, 760 feet. B. 43, 560 feet. C. 2, 640 feet. D. 5, 280 feet.
The answer is D. 5, 280 feet. 1 mile equals 5, 280 feet.
Question 107. Under the U.S. government rectangular survey system, how many acres are in one section of land? A. 320 acres. B. 640 acres. C. 36 acres. D. 160 acres.
The answer is B. 640 acres. 1 section equals 1 square mile equals 640 acres, and 1 township is 36 sections.
Practice every one of these questions free at quibank.com. The link is in the description.